Today is August 21st, 2023, and this is my trade recap. Coming into the morning, I had proper sleep, proper meditation, and I just looked at the daily chart on SPY and did a quick daily chart analysis. And just looking at the daily chart, it doesn't really look like a day where I knew it's going to be a choppy, tricky day today because there isn't too much room to the upside, but also it's too extended to the downside at the moment that a bounce is necessary. In which case you kind of have to scalp both sides, expecting continuation of move lower. But there's still room for that bounce, so you can take advantage of the long side setup for the first retest of key levels and expect that first retest of key levels to reject. So the plan coming into the morning was more favorable for long side trades on any follow through to the downside. So, and there was no news coming out today as well, which is always a bonus, where you could just trade the technicals. So the first trade I took was actually was a dip long on SPY, I was avoiding all short side trades in the morning today. So I avoided the first 10 minutes perfectly. I avoided the first short setup because the risk reward didn't make any sense. And I waited for the reclaim of that level to start going long. So the short I saw was through 4,400. And then the reclaim of that level is where I started to go long, where I broke that level and I started to hold that level. And the risk was going to be off this this candle low right here at the time, that 95.5. So I got in long right there, and my risk was ultimately going to be this wider trend line off the 1 minute, 3 minute, 5 minute that from pre-market. And that was exactly the area that it did bounce off of, but it really failed to get going on the first attempt at a move higher. In that case, I can move my stop lower now to the confirmation of the break of that trend line, which is that 4396 level. So once that level broke, I just took out my entire position with a stop order out at 4395.75, and that's where I got filled. And this was a perfect 1 hour loss, or not even, since I moved the stop tighter. Perfect sizing on this one. Great job not adding prematurely on this one, and great job sticking to your stop. Because this actually gave you a reason to add right here, but that's not a valid add. That's a premature add, and great job avoiding that one and allowing yourself to take that full R stop at the original plan, or even better at the moved up stop that you just moved it up to as the chart developed. The next trade was a same idea on this one. I don't want to be on the short side of this at all, and this was the break of that trend line here earlier from pre-market to the lows now. Once that level broke and I saw buyers just stepping on this crazy, I decided to start buying the reclaim of that level once more, that 4395 level. Once that level reclaimed, I started buying, risking wide off the bottom of this candle low. Well, at the time before that candle closed, I was risking off this 9.3 level. So 5 contracts at a 9.6 entry, risking off of 9.3 is $75. Perfect sizing. Great job on that. And then once this candle closed, I'm risking off the lows of this candle, so even tighter risk on that. And then once it started to curl up, consolidate, and hold above that key breakdown level, I know that shorts were on the wrong side of this here, and then the first low grade flag to trigger is most likely going to stop them out. And once it stops them out, it is going to meet my profit targets. So I wanted to add onto any area where it gave me a valid add signal with a tighter risk. And the first valid add I saw was the break of this trend line, while also breaking key levels where shorts are going to be stopping out. So any shorts that's trading aggressively on this lower highs, maybe potentially risking off this area high right here. Same with anybody shorting the confirmation break right here is going to be risking off this lower high here. And then at the same time as triggering a 5-minute trigger long on the break of, well, 1 minute trigger long on the first break of this trend line here, but on the 5-minute there's a trigger long at the same area where the shorts are going to be covering. So that's going to be the break of this 4399.5, and I just took aggressive ads into those levels, risking very tight now off this 4396.7 level, and it's gonna be a 1 hour risk on the trade still because I keep moving my stop tighter and tighter and tighter as I add. So great job not adding prematurely and waiting for areas to break before you take that ad. And once that level broke, you saw that first squeeze. This is the only predictable part of the move. You want to take out risk-free scales into this. Any profits that you can take out to minimize your risk completely, you have to do that here. So this is where I took those sells into these levels here for that risk-free trade, and then next into the pop, just tiny 1 or 2 contracts here, and then into the dip here, I rebought right here, 2 contracts, risking very, very tight. And I know it was a very tight risk, and I wanted to trail in case this ends up squeezing all day. Into higher day, I missed that sell by 1 tick. So I end up having to stop out 1 tick, or stop out 1 contract right here at the break of this candle low. And then as it's setting up for a short-term trend reversal with a valid short trigger with valid risk reward to the downside, I decided to take 1 more sell here, and then on the next candle, when it reaches my my original risk on this trailing position at this 4401 level, I decided to take 2 contracts, 4401.25, basically 1 tick risk on those 2 contracts, and immediately I have to stop that up. Actually, no, sorry. This is the stop. I took the ads at 4402.75, so basically about $10 risk on the ads right here, very tight risk ad. And then at the break of this candle, I don't want to be in it at all. This 4401.5, because now that means that the short sides is most likely going to remain in control here, and longs have no more reason to stay in the trade, in my opinion, the short-term traders at least. So I took the rest of the sells right there and just called it a day. I am very happy with both my executions today. Maybe on the first one, I could have been a little bit more patient with my ad, because it was still technically, there was no confirmation. But I thought the probability of this trade continuing higher, if I gave it that wide risk, was very, very high, especially coming into a choppy day like today. But I was wrong. Great job with sizing, great job with risk management, and respecting that stop. Second trade, amazing patience with the starter, amazing patience with the ad, and great job moving your stop tighter and keeping risk management as number 1 priority into the first predictable pop, and then locking in profits into the pop, and then willing to add for a potential trail all day. Trail all day never came. So great job sticking to that stop and making sure to keep that trade a winner no matter what. Because if I just hesitated on the stop, even on the trailing 3 contract position, I could have given back a huge chunk of this just by hesitating on my stop here. And then I'm like, all right, I'll just wait for a bounce. The bounce kind of happens here, and then it never gives you any bigger bounce here to take to sell into, and then it just dumps all day. So now what? So great job with respecting your tighter stop here, making sure to lock in those profits when you have them. And going into tomorrow, I believe I'm gonna have the same 1% rules for going into tomorrow. Proper sleep, proper meditation, proper avoid first 10 minutes of trading, and stick to proper starter size, and don't add prematurely. All right, that's it.